We are going to 8.2.2. Slide Limited is preparing a cash flow forecast for the 3 months period from January to March. So you need to prepare from January up till March. The following are the sales volume, and now the sales in units is given. Selling price per unit is 600. Sales are all on 1 month credit. Now this is easy because in previous question it was 10%, remaining amount credit, 50-50. Here sales are all credit and they are 1 month credit. So it will be easy. Production of the goods for the sales takes place 1 month before the sales. Each unit produced requires 2 units of raw material costing rupees 150 per unit. No raw material inventory is held. Raw material purchase are on 1 month credit. Variable overhead and wages equal to rupees 100 per unit are incurred during the production and paid in the month of production. The opening cash balance on 1st January is expected to be 35,000. A long-term loan of 2 lakhs is expected to be received in the month of March. A machine costing 3 lakhs will be purchased in the March. Prepare a cash budget for the month of Jan, Feb and March and calculate the cash balance at the end of each month in 3 months period. Calculate the forecast current ratio at the end of 3 months. We will not be preparing current ratio because this point we have not done up till now. So we can solve easily this. We need to prepare cash budget of Jan, Feb and March. So let us prepare cash budget Jan, Feb and March. Opening balance plus cash inflows. Inflows will be very less. So you can keep 2 or 3 spaces blank. Minus cash outflow will be my closing balance. See now, sales units is given and per unit price is given, right? I am writing both in my chart: December, January, February, March and April. December, Jan, Feb, March, sales in units. 1800, 1875. 1950, 2100. 2250. Those are my sales in unit. I can easily find out sales in rupees. 1800 into 600. 10,80,000. 1875 into 600. 11,25,000. 1950 into 600. 11,70,000. 2,100 into 600. 12,60,000. And 2250 into 600. It is 13,50,000. Now, all the sales are on credit and the money is recovered in next month. This is what is given in the question. All sales are on 1 month credit. So the sales will be a credit sales and money will be recovered in next month. So I'm not even writing it down. Try to understand. It is very easy to understand. December sales will be recovered in Jan. Jan sales will be recovered in Feb. And Feb sales will be recovered in March. I am interested only in 3 months, January, February and March. So 10,80,000 rupees is the sales of December, but the money will be recovered in January. Why? December sales, it will be a credit sales. They will become our debtors. They are given 1 month period. They will be paying in January. So this will become my figure for January, February and March. I'm not writing it again. I will be just writing 10,80,000 not in December, in January. It is receipt from debtors. 10,80,000 for Jan. $11,25,000 Feb. 11,70,000 March. I'm not making any mistake, right? 11,70,000 I have written it in February, but they are credit sales of February. It will be received, the money will be received after 1 month, that is in March. Now there is an interesting point, try to concentrate about production. Production of goods for sale takes place. This is good. Production of the goods for sale take place 1 month before sales. So please understand, 1800 units of December will be manufactured in November. Whatever you are going to sell in January, you will be making in December. Whatever you are going to sell it in February, you will manufacture in January. So when this sales unit will be manufactured, try to understand. Manufactured month. I'm starting with November. 1800 will be manufactured in November. 1875 will be manufactured in December. 1950 will be manufactured in January. 2100 will be manufactured in February because it is sales of March, and 2250 will be manufactured in March because it is sales of April. It is manufactured month. The goods in which they are manufactured or purchased is not actually the cash outflow. I am just writing that it will be this 1800 units. There is no opening stock, closing stock. December sales is manufactured in November. January sales is manufactured in December. This is what is written. Production of the goods for sales take place 1 month before the sales. Each unit produced requires 2 units of raw material costing rupees 150. So for 1 unit of output, you will require 300 rupees. 2 unit raw material. So if you want to manufacture 1 output, 2 units of raw material will be required at the rate of rupees 150. That is rupees 300 is required to manufacture 1 unit. So what will be manufacturing cost for all this? Now you need to multiply 300. So 1800 into 300. It is 2,40,000. Manufacturing cost in rupees 2,40,000. 1875 into 300. 5,62,500. 1950 into 300. 5,85,000. 2100 into 300. 6,30,000. And 2250 into 300. 6,75,000. Now, this is manufacturing cost happening in November, happening in December, in January, February and March. But manufacturing cost incurred is not my cash outflow. Paid is my cash outflow. And they say no raw material inventory is held. raw material purchase are on 1 month credit. So it is not actually raw manufacturing cost. They are just purchasing and selling. So I should not write down manufacturing. I should write down purchase. Not manufacturing, but purchase. All right. Now purchase of December will be paid in Jan because it is credit purchase. Jan will be paid in Feb. So this 2,40,000 will be paid in December. 2,40,000. Now it is paid to creditors. This 5,62,500 will be paid in Jan. 5,85,000 will be paid in Feb, and 6,30,000 will be paid in March. We are not concerned of April because I want to prepare cash budget of Jan, Feb and March. Now actually what is happening, try to understand. How many units we are selling it in Jan? 1875. You could have done 1875 multiplied by 300. 562, 500. Direct answer. No crisscross would have been required. But you need to understand what is happening. If I want to sell goods in Jan, I need to purchase it in December. So purchase will happen in December. But purchase is on 1 month credit. So ultimately it will be paid in Jan. So Jan, whatever you are selling, you are manufacturing in December but paying it in January. So January sales will be paid, purchase will be paid in January. February purchase will be done in January but paid in February. March purchases will be done in February but will be paid in March. So you could have done 1875 into 300, 1950 into 300 and 2100 into 300. You would have got the same answer. Paid to creditors 562, 500. Five lakh 85,000, 6,30,000. This is what will be paid to creditors. Now this was a difficult point in this particular point. Variable overhead and wages equals to 100 per unit are incurred during the production and paid in the month of production. So what is variable overhead and wages? 100 rupees per unit. So when you are manufacturing 1800 units in November, you are purchasing and manufacturing it in November. You are not, you are selling 800 rupees in December. You are manufacturing 800 in November. So wages will be as follows. 1800 into 100. So 18,000. 18750. It is 100, right? 1,80,000. 1,87,500. 1,95,000. 2,10,000. 2,25,000 will be my wages. They are paid in the same month. So 1,95,000 will be paid in Jan, 2,10,000 will be paid in Feb, and 2,25,000 will be paid in March. 1,95,000. This is wages. 2,10,000. This is wages. 2,25,000. This is my wages. We are going to next point. The opening cash balance 1st January is 35,000. Opening cash balance will be 35,000 in the month of Jan. A long-term loan of 2 lakhs is expected to be received in the month of March. You receive the loan? Yes. If you take a loan, it is your liability, but there is a cash inflow, which will be 2 lakhs rupees in March. So loan taken will be 3 lakhs rupees. March cash inflow. Sorry, it is 2 lakhs rupees. And a machine costing 3 lakhs will be purchased in March. So we are assuming that we will be paying for machinery. 3 lakhs rupees will be purchased in March. Purchase of machinery in cash is my cash outflow. Prepare a cash budget. Now just there is addition and deletion that is to be done. 35,000 plus 10 lakh 80,000 minus 562,500 minus 1 lakh 95,000. It is the 357,500. Will become opening balance of February. 357,500 plus 11 lakh 25,000 minus 5 lakh 85,000 minus 2 lakh 10,000. 687,500. Lakh, sorry, 687,500 will become my cash flow for March. I'm making some mistake? No. 687,500 plus 11 lakh 70,000 plus 2 lakhs minus 6 lakh 30,000 minus 2 lakh 25,000 minus 3 lakhs rupees. 9 lakh 2,500. And this chart will be my cash budget. So very easy point, cash budget, nothing to do about this. And you just need to prepare a cash budget. A small point in cash budget, please try to concentrate. Suppose this, I am writing my closing balance of Jan, Feb and March. It is out of this question. The closing balance are 357,500. 357,500, 687,500, 9 lakh 2,500. Try to concentrate. If this is given in your question, it is a policy of a company to keep only 10,000 rupees as a cash balance. Remaining amount in multiples of 10,000 are kept in fixed deposit. So you don't keep a cash balance of 3,57,500. Whatever is an excess amount, you keep it in fixed deposit. This is the policy of the company. Then my closing balance will not be 3,57,500. How much closing cash balance I want? Only 10,000. So remaining amount I will put it in fixed deposit. So 3,57,500 minus 10,000. 3,47,500 I'll be putting it in fixed deposit. What will be my closing cash balance? 10,000. Will become opening cash balance for February. And this figure will change. This figure will change. This figure will change. Every time any excess cash balance over 10,000, I am putting it in fixed deposit. Second point. Sir, if January balance was negative 10,000, then what? Then it will be given in the question, what if there is a negative cash balance? Normally they will be saying you that you take a loan of such an amount so that your minimum cash balance is 5,000. So if the answer is coming negative 10,000, you will be taking a loan. Now loan is a cash inflow of 15,000 and your cash balance will not remain negative 10,000, it will become positive 5,000. But whenever the question is having a negative cash balance, the sum should clarify what to do. If it is not clarified, a simple answer is you can take a loan of that much amount. Why I have taken 5,000 rupees more loan? Just because it is written in the question that my minimum cash balance should be 5,000. So it may be asked in examination that excess cash is put into fixed deposit or invested. The shortfall of the cash is satisfied through a loan. This is also a possibility as far as this type of questions are concerned. We will be starting with working capital management questions, or that is working capital requirement questions tomorrow, and we'll be finishing working capital management tomorrow.